Kate, do you have another speaker for me?
Yeah, I believe you're next.
I am next. Okay, so let me share my screen. Continue. Let's go to that one. Share. Okay, you can see my screen. So slideshow play from start and use slideshow. All right. How's that looking, Kate?
Looks good. We see your front page.
All right. And very famous picture from the early days of the internet. And who knew this would actually happen in real life, that our lives would be taken over as data and that we would all be living in an alternative universe. So this is John Thomas, the Mad Hedge Fund Trader, with my Mad Hedge Technology letter. This is a Silicon Valley based research and trade alert service. If you want the best tips on which tech stocks are going to move yet, don't go to New York, don't go to Miami, don't go to Beijing or even London. You want to go to Silicon Valley. And I've been covering Silicon Valley since it was all a giant peach orchard. And Apple was a twinkle in Steve Jobs' eye. So I actually did used to communicate with Steve Wozniak when he was president of the Santa Clara Homestead High School Radio Club. We used to talk to each other via Morse code back in the mid 60s. Yeah, it goes back a long time. I saw Steve just the other day at a restaurant and said hello, and he is still alive despite multiple plane crashes. So anyway, it's all about the data, and let me tell you how valuable that data is and how much people are willing to pay for it. So let me give you a 90,000 foot view here. The Fabulous Five have dominated the market in 2024, accounting for the bulk of stock market performance, and will continue to do so for years to come because they are making the first profits from artificial intelligence. No net money went into the stock market in 2023. I bet not many of you know that, while 1 trillion went into treasury bills. Tech is now undergoing a time correction where it flatlines for months. So I expect no major technology stock pullbacks, but tech will dominate for the next decade as it did during the 1990s. And the high beta semis will be the leaders. And it is timely for me to say that because NVIDIA briefly became the world's most valuable company today, just touching $3 trillion in market capitalization and surpassing Apple. But you must know which names to shoot for. Ask a Silicon Valley insider. And that is the 90,000 foot view. I'm piloting a MiG 25 there over Russia some 30 years ago, 35 years ago. And my co pilot is not very happy since I was not supposed to take pictures inside the cockpit. You can see the curvature of the Earth there, and our forward view was about 400 miles. So another tech decade is at hand. After the wreckage of 2022, the cost of staying out of tech is now higher than the cost of staying in. The higher the tech stocks go, the cheaper they get, thanks to exploding earnings. NVIDIA tripled in the past year, but their earnings multiple actually fell from 40 times to 30 times. Big tech stocks now present no more than 10% of downside risk, but 100 side of upside potential on a 2-year view and 200% on a 5-year view. Best to start scaling into the best AI names now and stay tuned if you want to find out exactly what those names are. Just close your eyes and buy. Don't look for any huge capitulation sell-offs like we had in October. That is in the rearview mirror, and we probably won't have another one of those for a long time. Tech industry still earns double the rest of the economy with a fraction of the employees over time, and this will only improve. And if you don't believe me, look at NVIDIA. And this is yesterday's chart. We actually just fell short of 1,200 today, taking it to 2.95 trillion in market cap. That's a once in a lifetime stock. You only see a few of these in your lifetime, and we've been into this one since it was at $30 a share. Seminal investment theme of our lifetimes. The leading sector in the market for the past 30 years has once again jumped into the lead. Another new decade-long tech bull market has only just begun. Even though big tech stocks were trashed in 2022, earnings never stopped growing. They just slowed down a bit. They are now re-accelerating. Eventually, all companies become tech ones or they'll cease to exist, at least as we know tech today. Technology innovation is accelerating, not slowing down. AI is the new tech hyper accelerator, as we all know. Investing your retirement funds is now all about which tech stocks to own and nothing else, really. Of course, COVID gave us a tech accelerator. Pandemic accelerated all pre-existing trends in the economy tenfold, bringing the future forward by a decade and boosting creative destruction at an incredible rate. Money is moving out of old into new, bricks and mortar into digital, non-tech into tech. Technology is a huge beneficiary of all of this. Why are these companies worth so much? Well, just think about it. Microsoft knows every keystroke you've made for the last 30 years. Alphabet knows everything you searched for the last 20 years. Meta knows every social media post you've made for 20 years. Amazon knows everything you thought about buying or bought for the last 25 years. Salesforce runs the databases for most of the Fortune 500 and therefore has hundreds of data points about you personally. That if that doesn't scare the daylights out of you, I don't know what will. Turns out all this information is worth about $15 trillion today and 50 trillion over the long term. So yeah, it's really all about the data. Okay. Of course, AI has the tech accelerator. AI has accelerated demands of technology on all fronts. The internet has to grow by 500% immediately to handle existing AI demands for both hardware, software, and electric power. So that creates all kinds of spin-off uh, derivative trades you can do. And I have a shocking derivative trade alert for you at the end of this presentation. AI expertise is now trading at enormous premiums. College students with AI classes are now getting $300,000 offers straight out of school. And guess what? Colleges have suddenly started renaming all of their classes AI this, AI that. It's kind of reminiscent on what's been happening in the newsletter business. All companies are now integrating AI into their products as soon as possible. It's like the internet, the World Wide Web, and cheap PCs, which hit all at once as they did in 1995. Hint, the stock market went up 6 times the last time this happened. What happens if we go up 6 times now? That takes us to 40,000 times six. That's 240,000. And that is a long-term forecast I've been making for my own customers for quite some time. Okay, just take a look. Yeah, Wilson just pointed out, NVIDIA just broke 1,200. Yeah, that puts it at 3 trillion in market cap. AI is rapidly filtering into our daily lives. It's been around for more than 2 decades and now is permeating into the entire global economy. We here at Mad Hedge been using AI for 13 years, and it has doubled our performance for our customers. Whenever Amazon recommends a new book or Netflix another movie, that's AI at work. Big users now have been Google, Amazon, Meta, Netflix, Tesla, and Apple. AI is now getting so cheap it is going mainstream with the rest of the economy. That makes the stocks of all AI users more valuable, which it should do. After the worst economy in a century, who gains? And that's the pandemic economy I'm referring to. Big tech stocks are now seen as the new safe stocks, drawing in massive institutional and 401k buying. Top five tech stocks are now worth 30% of the entire stock market. Plunging interest rates will be the primary driver of stock prices towards the end of 2024. Tech stocks are far and away the biggest beneficiaries of lower rates, which are imminent. The next tech dip is the one you buy. If tech is so good, why did it crash in the first place back in 2022? Well, thanks to massive liquidity infusions from the Fed over 15 years, tech share prices outrun earnings growth by a huge margin, leading to extreme overvaluations. That meant a correction was desperately needed in both time and price. Boy, did we get it. Tesla was down 80%. Meta was down more than half. A lot of big stocks were down more than half. Big caps pulling down 40 to 60%, and smaller speculative shares off 80 to 90%. Those are the best infrastructure plays like Nvidia and AMD are leading the breakout. Smaller stocks like Palantir, PayPal, and CrowdStrike may have longer to recover, but are great long-term buys right here. It all adds up to the best tech entry point in a decade and may be the last good one we get this decade. This is what I begged you to do a year ago. I begged you to buy NASDAQ at 11,200. What happened? Well, it went up 50%. It's 50% higher now. Uh, Actually, this chart is a little bit out of date. We're much higher now, but we did achieve 36% and then 50% on the NASDAQ performance. So you want to get into the following sectors on the next correction, dip, mini dip, whatever. Artificial intelligence is now permeating every aspect of modern society, especially the trading of stocks. AI will determine the success or failure of all products and companies from now on. Trade the market without an AI-driven algorithm at your peril. AI tied in with big data now leads almost every major corporate sales and marketing initiative. The AI big data combo will also cure every major human disease over the next decade, creating $1 trillion a year market for cancer cures alone. And one of our favorite stocks in this area is CrowdStrike, and they provide the security for very large databases and AI. And if you're wondering what these blue boxes are, these are AI targets for these individual stocks, and it's an AI that has a 90% success rate. Here's another stock, Global X Robotics and Artificial Intelligence ETF, or the bots. That also has had a great run. And we are targeting $50 for this year. Cloud-based applications. All major companies are now shifting to cloud-based strategies. Exponential growth of data means physical on-site storage is becoming impossible. There's too much data to store on-site. No place to go but the cloud, where capacity is unlimited. The AI demands on cloud growth are exponential. Cloud-based service providers are one of the fastest growing technology providers. The problem is security. How safe is the cloud? And of course, we have some good recommendations here. Salesforce, which very kindly just gave us a 30% sell-off to get into. As a result, I'd be picking up Salesforce right now. We're targeting $300 a share. Cybersecurity. As the global economy moves online, so will the theft of its most valuable properties. Cybersecurity is in an arms race with the stakes rising daily, and AI is accelerating the frequency and the sophistication of attacks. It's a great setup for investors with a small number of providers facing exponential growth of demand. Most large companies use all of the big three to cover all their bases and mitigate risk. Hacking is one of the few recession-proof industries in tech, and there's a bunch of companies in there you can use. One of our favorite is Palo Alto Networks, which also had a really nice sell-off in February because they are doing a generational upgrade on their cybersecurity platforms to handle threats posed by AI. A great reason to own the stock for the long term, but it did lead to some downward guidance for the short term. We're looking for $400 in Palo Alto networks by the end of the year. Autonomous driving, and I happen to have one of these myself, my Tesla Model X. Full street-to-street autonomous driving is now available at 15,000 on all Tesla cars, and in fact, they just cut the price to $8,000. That makes the software more valuable than the car. Tesla is overwhelmingly in the lead with nearly 6 million users. Worker productivity will soar. Accident rate goes to zero, crushing insurance companies and hospital. Insurance rates also plunge with the smaller number of accidents, with Tesla already offering coverage at less than half the market rate. Tesla is offering insurance 90% cheaper than the competition because it knows how you drive. If you drive like a little old lady, you get the little old lady rate. If you drive like Mad Max, you pay the Mad Max rate, which is much, much higher. So Tesla, the leader in autonomous driving, kind of an interesting chart setup here. This is called a head and shoulders bottom, shoulder, shoulder, lower head here. But, we are having a nuclear winter in EVs, which is dragging down the share price. I think eventually we come out of that and Tesla takes off like a rocket. Buy Tesla on the dip. And let me tell you a little bit more about insurance. Tesla's remaking the insurance industry from the ground up. It is charging drivers on their actual driving history, which they already have. Uh, Rates change monthly. If I drive very carefully, never exceed the speed limit, I'm paying $129 a month. If I pass the speed limit a couple of times, all of a sudden it's $190 a month. I was paying almost $2,000 a month in insurance with my previous company, who shall remain nameless. Suffice to say, anybody who has a Tesla would be crazy not to get the Tesla car insurance. I know it's only available in some states, but boy, is it worth getting. And I know it is available in California and Nevada. It's all about reducing the total cost of a Tesla car. Not such a bad do if you let their computer do all the driving. What will Tesla disrupt next? Well, there's a whole long line of things that Tesla, or at least Elon Musk, is disrupting. And he seems to have a success rate of 100%. Okay, Google also looks like a fantastic buy here, another major AI player. They have 92% of online advertising. Of course, they're being subject to antitrust investigation, as are all the big tech companies now, really. But they are a major AI player, and we're looking for $250 by the end of the year. Online commerce, of course. Amazon is taking over the retail world with 50% of all new online sales, and COVID gave it an enormous turbocharger. Mhm. Take a drink of water here. Antitrust and other government intervention won't challenge it anytime soon. If it does, the value doubles. Amazon Web Service, or AWS, is the 800-pound gorilla you can't see. New business lines beckon, like drugs, healthcare, and entertainment. Here's Amazon. We're looking for 250 this year. I actually put on some leaps myself this morning. Those were the January 25, 195, 200 vertical bull call spread, and those expire worth 150% up in 9 months. We'll talk a little bit more about leaps later. Amazon is the most undervalued of the major tech AI players. So screaming buy down here. And as far as antitrust, if you break Amazon up, it becomes worth twice as much because the individual parts are worth more than the whole. Retail business will grow from 600 billion to 2 trillion. Amazon Web Services will grow from 400 billion to a trillion. Advertising will grow from 10 billion to 100 billion. Other business lines, like in food, healthcare, and so on, grow from 0 to 300 billion. This gets you to $4 trillion by 2026. and the individual parts could be worth a 50% premium, which makes it worth 6 trillion. So coming in here, you get you get to take advantage of these growing multiples. And by the way, government will have a very hard time with antitrust anyway, because they're middleman for 70% of their sales, and there's no vertical integration except for the Amazon delivery service. Internet infrastructure, building the hardware that makes tech work is essential. Any progress in a single tech subsector increases the demand for all the others. It's sort of like a mutual admiration society. This creates an exponential growth curve for the entire tech industry, which is how it has come to account for such a large part of the US economy so quickly. Tech is growing so fast that it is creating a jump in demand for semi-skilled blue collar and other support jobs as server farms, high-speed transmission towers cover the country. You no longer need a PhD from MIT to get a tech job. And of course, we cover multiple companies in this sector. Government is now pouring trillions of dollars in subsidies to jumpstart investment and to reshore manufacturing from China, such as through the CHIPS Act. Cisco Systems is a good play here, putting in a major double bottom. At some point, the market's going to look for laggard stocks. This is a good one. We're looking for $60 by the end of the year. They're the largest builder of internet routers in the world. Big data applications. The mining of massive databases with AI is now becoming possible for the first time by both government and private industry. Understanding how to access and manipulate this data is the key to understanding the future of marketing, scientific research, the weather, and even politics. IBM's Watson can read all the scientific papers on cancer ever written in 30 seconds, enabling unprecedented levels of cross-referencing, and we're now on the third generation of Watson. Big data needs new software applications to enhance understanding and massive server farms to house the data. And of course, those who are from Atlanta, Georgia, will know exactly where I am. That is the information booth at Coca-Cola headquarters. Microsoft, of course, is the front runner with OpenAI, has a front row seat with ChatGPT. We're targeting $500 by the end of the year, and the market will prove me conservative on this one because it's already having a nice $6 move up today. Fifth generation wireless technology, or 5G, big telecom like AT&T, Verizon, and investing $30 billion to assure 5G wireless spreads. Increasing wireless broadband capability will increase performance of many products and services by tenfold. It will bring a new generation of super fast smartphones and other wireless products with the launch of iPhone 15. Suddenly, many experimental technologies like autonomous driving and AI will become functional and cheap. You can download a 2-hour movie on your phone now in 10 seconds, and 6G doesn't come along until 2030. One little tidbit of information here, AT&T is scrapping their copper wire network. And guess what? The copper is worth more than the company. They plan to scrap 50% of their network by next year, replacing it with fiber optic cable. And the price of copper has recently doubled and is about to double again. So there's another great idea for AT&T. Crown Castle International, great here, has a 5.6% dividend. It's a REIT. They specialize in 5G cell phone towers. And I love this stock for the long term in addition to the yield. So, and that also sits in my personal retirement portfolio. Microprocessors and GPUs. Of course, this is the highest value added area of the technology field. Uh, NVIDIA's uh, uh, microprocessors are the cutting edge, and they have a waiting list of customers that goes out for several years. They have so much business that it's spilling out into other companies. So look for enormous moves up on the rollout of AI and increased defense spending, create an acute global chip shortage as chip demand increases. In a highly cyclical industry, chip producers now facing unprecedented shortage of their products by companies racing to build AI products. It's enabling companies to increase margins in a rising market, which is a dream scenario in any country, any company. Barriers to new entrants extremely high at $20 billion a factory in 2 years to build. GPUs are leading the charge into AI. The industry has consolidated tremendous space. And of course, we only have a small number of players here, NVIDIA, Micron, and AMD. Of course, AMD is looking like the bargain now. It's been lagging. NVIDIA, certainly worth the buy here, certainly worth a leap. We're targeting 300 by the end of the year. It's the next $1 trillion company. Fintech is another area that's turning legacy banking into the next buggy whip industry. Huge, expensive brick and mortar branch networks make it impossible for banks to compete with overhead light fintech companies. Blockchain is creating encryption for transaction security on an industrial scale. Regulation-like companies have the unfair advantage you are looking for. Many stores no longer accept cash, and in Europe, entire countries like Norway don't accept cash at all. They only want cards, or they only want you to swipe your phone. So, of course, the leading fintech company is PayPal. We just had a sell-off, good place to get in, looking for $100 a share in PayPal by the end of the year. Blockchain technology. While all the media focuses on cryptocurrencies, the real groundbreaker here is in blockchain technology. Blockchain could eventually replace the entire banking system, could also spawn a global currency run by governments. It will be those who sell the shovels to the gold miners who make the big money. Blockchain is creating incredible new demand for every corner of internet infrastructure. Security is still the big issue. And of course, you want to best take advantage of blockchain by buying one of the biggest users, and that is NASDAQ, the exchange itself, which is now using blockchain to settle its trades. And this could be an even larger market as the trading volume of NASDAQ shares goes through the roof. Share buybacks are another big tech supercharger. Technology companies are spinning off profits so fast they're creating massive cash balances. Most prefer organic growth to takeovers, so the money isn't spent there. 75% of all share buybacks take place in tech, and in fact, roughly 75% of all company profits are now going into share buybacks. So, if you have any questions, just look at Apple. Apple, Microsoft, Micron, Intel happen to be the largest buyback companies right now. Look at this. Apple announced terrible earnings, but a $110 billion share buyback program, and that took the shares from 165 to 195, up almost 20%, up $30. So if you have any doubts about share buybacks, just take a look at this chart. The resolution with a blistering earnings growth rate and the end of COVID, it's just a matter of time before we break out to new all-time highs again. Watch this space melt up. Going into 2025, get ready to start reeling in those whoppers with the Mad Hedge Technology letter as your guide. And yes, that is a 24-inch rainbow trout, which I caught on an Indian reservation in northern Nevada. That's Pyramid Lake. Unfortunately, it is catch and release there, so I couldn't take home my trophy and have it mounted. The Mad Hedge Technology track record is unmatched. Let a lifetime Silicon Valley insider make your tech stock picks for you rather than you throwing a dart at the stock page of the Wall Street Journal. A proven history of delivering blockbuster technology trade recommendations, in-depth research reports on the target company and industry follow shortly. Get on the early stage of every big trend. Let a 55-year technology veteran translate his experience into winning trades for you. Here's our secret weapon, the Mad Hedge Profit Predictor. That's a market timing index with a 90% efficiency rate. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators. And right now, today, the reading is at 42, which is just short of neutral. Why do you need an algorithm? Well, why you use a toolbox missing its most important tool. Algorithms have become so dominant in the market, you should never trade without one. Ours took a team of mathematicians 1,000 hours to create. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. This is 3 years of profit predictor performance. You see, we get lots of buys at market bottoms, sells at market tops, buy, sell, buy, sell. This is called trading. And again, to have an algorithm behind you with a 90% success rate, that is the way to go. Here's how it works. We saw an opportunity spotted by our algo right here to buy Micron technology. So we sent out a trade alert, and it looks exactly like this. Buy the Micron technology at 42,010 best. It's an opening trade, and to get a $10,000 exposure, you needed to buy 238 shares. What happened? Well, we got a 15.63% profit in Micron in 15 trading days. Did we just pat ourselves on the back and do nothing? No, we sent out a trade alert, said take profits. Sell Micron technology at 48.58 or best, closing trade. And on this particular trade, a $10,000 investment made $1,563 in 15 days. So this is our Mad Hedge Hall of Fame, our history of 10 baggers in the technology area. We got Zoom technology, that went up 10 times. We got Lam Research up 10.6 times. Moderna, we got up 12 times before the pandemic. Square, we got a 25 bagger on that one. NVIDIA, we have a 40 times return on our original investment at $30 10 years ago. And of course, the granddaddy of them all, up 180 times on Tesla with our split adjusted cost of $2.35. So we're offering you the Mad Hedge Technology Letter. It's the one sector you absolutely have to follow on a daily basis. A 3 times a week read of the most important developments in technology, giving you the best stock plays. It includes a time-sensitive trade alert service sent out at market sweet spots, about 200 a year, research by dedicated technology analysts based in Silicon Valley. It will send you immediately actionable trading and investment ideas on every important stock and subsector in technology. Finally, the detailed understanding of technology you have long been searching for. You need a real pro to guide you through the technology maze. Not all tech is monolithic. There are both great tech stocks and awful ones. You can earn a 10 times return on the great ones, but get wiped out by the lemons. A lot of tech stocks go public right when their earnings are peaking and their business models are about to die. Why you need me to stay up to date? You could copy the ticker symbols from this webinar and probably do okay for a few weeks. However, technology investing can be notoriously volatile. Today's darling can be tomorrow's goat. Just giving you today's popular names is like handing you a book of matches in a gasoline factory. Let me keep you current on the latest earnings reports and developments. That is the best way for you to max out your profits. With our service, this is what you get. You get the Mad Hedge technology letter 3 times a week and updates on our market timing index. You also get Mad Hedge hot tips, 5 most important things that happened today and what to do about them. And you also get the Mad Hedge Technology Leap service. That is a strategy to multiply your profits 5 to 100 fold. Leaps are long-term equity anticipation securities. They minimize your risk while maximizing your profits. They're an ideal strategy for high-growth companies. They give you a very low risk with a very high return. They're only issued when the highest growth, best quality stocks reach extreme oversold conditions. This is where the big money is made in tech. And I'll give you an example of how a leap works. We bought for $10 when Tesla shares were trading at 100, the Tesla 130 January 2023 call options. The strike price was 130. We paid $10. So as long as the shares trade over 140, up 40% from the then current share price, you have to be above that to make money. What actually happened is Tesla rose to $900. So our net profit was 900 minus the 140, our cost, that's a $760 profit, or 76 times your initial cost, or 7,600%. With high growth companies, a 30% gain is no problem. 2-year expiration makes it a no-brainer. You only need 1 out of 10 out of these to work. In reality, almost all of our leaps have worked. I think we've issued 38 in the last 3 years. 37 of them worked, and the one that really bombed was our leap on natural gas. And this is Tesla number 125 off the assembly line. I bought it during the financial crisis and took it to the high school car wash, and no one had ever seen it before. Unfortunately, this car was totaled about 2 years later by a drunk driver in a GM, a Silverado pickup truck. So 51.48% average annualized return. That's what we've done over the last 16 years. That's versus 27.28% for the S&P 500. So we are running at double the S&P 500 rate. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my major hedge fund clients for advice on the technology sector, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge customers for personal one-on-one counseling. And I'm not going to charge you $2,500. That is the full price on my website for the Mad Hedge technology letter. This is the real deal. Creating this service cost me millions of dollars. The best customer service in the industry, running it cost me millions more. 6 months for just $998. This is for new subscribers only. It's a one-time only 60% discount from the website price. Just click on the chat box on the right, and there you see the Mad Hedge Fund Trader.com tech link is there. Click on that link, and that will take you to our dedicated sales page. Okay, so with your subscription, you will get 3 times weekly newsletter highlighting the most important developments in tech, immediately actionable text and email trade alerts sent out at market sweet spots. And by the way, we just sent one out this morning, but I'm not going to tell you what it is. Live coaching through a bi-weekly strategy webinar and interactive Q&A. Same-day answers to emailed questions about specific tech companies. Special reports on the dominant trends and players in tech. Access to a technology 16-year database. Gaining an unfair advantage in the most important investment theme of your lifetime will be the best decision you've ever made. Here's the offer you can't refuse. Let me show you how to make the money to pay for your own subscription. It'll probably cover the cost of this letter for the first year, as it does for 90% of our subscribers. Just click on the chat box on the right. Buy now and you'll instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 90% of these trade alerts make money immediately. And just to give you a tease, this is the chart on the trade alert that will be in your inbox seconds after you place an order. And what I'm not going to tell you is uh, whether this is a buy or a sell. So click on the chat box on the right to find out what the trade alert is for. So if you're going to spend the next hour with me or the next 6 months with me, who is John Thomas? Well, if my family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in rural California in those days but hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. And that's me hitchhiking in the south of France in 1968, back when nobody owned any cars. I'm not sure if the American flag in those days attracted rides or repelled them. And this is one of the papers I delivered as a paper boy. This was back in 1963. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. That's me in parachute school in the early 70s. And of course, doing research in Asia those days meant carrying a 45 caliber Sten gun. After 10 years of government service, all I got was this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. And if you're looking why I'm so skinny in Beijing here, it's because there was a famine going on where they lost 50 million people. I don't think they ever owned up to that one. I think it's still a secret today, but not a nice place to be. That's me on the North Korean border, me in Saipan digging up World War II bombs, and that's my old commercial pilot's license. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and this is my original ID card from Morgan Stanley, 1983. Yes, the years have been cruel. And that's me losing the All Japan Karate Championships. Never lose enter a karate final with a broken hand. And my phone has just started buzzing like crazy. I can see we've just had a ton of new subscribers. So if you want to participate today at today's discount offer, you better get moving. Don't sit on the fence. Oh, and we offer a full guarantee, money back guarantee for the lifetime of the subscription. So let me take a quick look here in my store and see what has come through. Okay. Okay, Jay from St. Petersburg, Florida has just come through. Thank you, Jay. Promise to work hard for your money. And check your inbox for the trade alert. You can execute it right now before it goes any higher. And if you can't find it, look in your junk folder. If you're a brand new subscriber, sometimes the trade alerts go to junk. We've had Karen from Cody, Wyoming come in. We have Eric from Flagstaff, Arizona, Adam from Durham, South Carolina, John from Douglas, Georgia, Wilson from Enterprise, Mississippi, and Frank from Columbus, Iowa, and there's still more coming in. So let me get on with my presentation. Uh, During Desert Storm, the country called, and I volunteered for service as a Marine combat pilot, and later I became a tank battalion commander. That's me and my M1 tank, and boy, that is an amazing machine. I rapidly became the top performing hedge fund manager of the 1990s, bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say when your income goes from the thousands to the tens of millions, really has a big impact on your lifestyle. You get to buy the latest hot car, fly your own private plane around Europe, collect vintage Rolls Royces, and go marlin fishing in Mexico. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account, turn it into 500,000, that is more job satisfaction than I could get anywhere. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco these days, it's probably me. The ultimate luxury, of course, is to give to those who need it. I'm a major donor to Wounded Warriors. When the wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. And this is my in-laws' house, which burned to the ground. And they were using a SIF box here to look for a wedding ring. They eventually did find it because it was made out of platinum, which has a much higher melting point than gold. All of the gold jewelry in the fires disappeared. Okay, so when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I made my way to Albuquerque, New Mexico to participate in their annual balloon festival and meet my concierge subscriber, James Branson. When I first met James years ago, he was toiling away trying to make a cattle ranch in Arizona pay, unsuccessfully so. He signed up for my entry-level global trading dispatch and started booking winning trades by the hundreds. It only took him a year to upgrade to my concierge service, where he started making the real money. After only 4 years, he'd made enough to sell his ranch and pursue the love of his life, hot air ballooning. He set up a business to take tourists into the air, starting out with a modest 6-passenger balloon. By the time I met him, he'd graduated to a monster 16-passenger airship that was at least 100 feet high. It was a crystal clear morning when he let me pilot. Let's see. Oh, it looks like we froze here. He let me pilot the balloon up to a breathtaking 9,000 feet over the New Mexico desert. Uh, Let me make millions of dollars for you as well as I have done for thousands of other followers over the last 14 years. I look forward to working with all of you. We only take 25 new subscribers at a time, so we don't have too many people trying to execute the same trade alert at once. And we do offer a money back guarantee. If you're unable to make money with Global Trading Dispatch, you can get 100% of your money back at any time. Just click on the chat box on the right. 6 months for just $998. And with that brings an end to my presentation. And now I'm going to answer questions. Okay. And let me check the store again. We've had Tracy from Grand Junction, Colorado come in. We've had Michael from Corpus Christi, Texas. Peter from Shreveport, Louisiana. And Lance from Bemidji, Minnesota. Okay, let's go to the questions here. Questions. What are your forecasts for Tesla's future business in China, and what will happen to its Shanghai factory? Is the future promising for them? Well, first of all, Tesla's already made more money in China to cover the cost of its factory, plus many billions of dollars. What's really most important now is that China has given permission for Tesla to use China as a test bed for its full AI driving. And the data they collect there will be far more valuable than any money they could make selling EVs. And by the way, the Chinese EVs tend to fall apart after 4 years, whereas the Teslas basically last forever. The batteries themselves have an 8-year guarantee. So I was just in South America where there are a lot of BYD cars for sale, and that's the word from the local drivers. After 4 years, it's basically a repair job with the Chinese, where with Tesla, basically, I've been driving Teslas now for 14 years, and I've never had anything go wrong. Or if something minor goes wrong, it's fixed overnight in a software upgrade. It's really that simple. Okay, what other questions do we have here? Do you think the US is in store for a hard landing or a soft landing in 2025? Well, I see a soft landing, and that's happening now. And then I expect a re-acceleration in the fall. Tech earnings aren't slowing down, but what will change is the year-on-year comparisons will start to cool off as after we digest some of these 100%, 200% year-on-year gains, thanks to the early profits of AI and tech companies. So looking for, no more than a 10% correction in the market. We'd be lucky if we get that. More likely we'll go sideways for a few months, and then it's off to the races once again. Okay, let's see what other questions I have. Can you recommend stocks in technology that have a heavy weighting in government contracts, which are basically guaranteed? And there is a company that's really good at this. That is Palantir, PLTR. The government is their overwhelmingly major client. They do large database management and cybersecurity. They work very closely with the CIA, Defense Department, and several other government agencies. The only problem with Palantir is you tend to get long periods of flat movement, and then all of a sudden it doubles. So as long as you're patient, Palantir is probably a good bet. And I believe Warren Buffett is a holder of Palantir. Okay. And another question, do you think the stock market will impact, or the election will impact the stock market? And the answer to that is no. What will happen is that trading will sort of cool off and volumes will shrink going into the election. And we may get stuck in a narrow range in September, October. And then once the result is out, whatever it is, stocks will explode to the upside. So that is normal for all elections. It happened in the last election. There's always is a great post-election pop once the uncertainty has been eliminated. So Yeah, no real effect of the market of the stock of the election on the market over the long term. Okay, here's another question, and please feel free to type in your questions right here. Um, this was in the news today. BlackRock and Citadel, so they'll create a stock market in Texas to rival New York. Will they make inroads, and how fast and how meaningful? Well, basically, all the markets in the world are going online, and the servers can be anywhere in the world to do that. Uh, so will there be a Texas stock market? I highly doubt it, unless they place server farms next to energy sources in Texas. But it won't get any farther than that. I don't think anyone will ever be able to duplicate the support services in New York City you need to create an active stock market, IPOs, you need uh, settlement clerks, you need lawyers, securities lawyers for IPOs. You know, New York employs about 200,000 people in the stock market, both directly and indirectly. I don't see anybody replacing that anytime soon. What is more likely is New York disappears. It all goes online. Everything becomes automated. People's jobs get replaced by algorithms. That is the bigger trend. And that, in fact, by the way, is already what has happened to Chicago. Chicago has seen a shrinking population for the last 10 years, largely because much of the commodity and futures business has moved online. And look no further than NASDAQ using blockchain to settle trades instead of humans. So that's my opinion on that one. Okay, do we have any other questions? Wow, NVIDIA just broke $1,200. Cheers, three cheers. And let me give you all a quick market update because I know you've been uh, glued to this presentation. Let me see what we've got. Okay, let's go to this. Okay, Dow up 48, going nowhere. Gold up 250, kind of like that. Silver up 37 cents. That's a big move for silver. Okay. NVIDIA 1,213. I do believe that makes it the world's most valuable company. Really depends on what Apple is doing, which is also up $2 today to 196. Triple Q's up 770. We're having a nice technology day. Microsoft up 689. TLT bonds reaching a multi-month high here at 93.11. Meta up $10. They're having a nice day. And I know we just took profits this morning on our long position in Meta for existing customers. Let's see what else we have going on here. CCI, which I recommended, down $1.24. It's actually a good entry point here. And Tesla up 34 cents. Mm-hmm. Palo Alto Networks, big day, up $4.52. Okay, Amazon up 188. Okay, and what other tech stocks do we have going? Netflix up $13. This is definitely a tech leader day. The ROM, which is the 2x long ProShares Ultra Technology Fund, that is up 250 at 63. I believe that's a new high for the year. Okay. All right. Well, let's do one last check of our list of buyers. And Ian from Cambridge, England has just come in. We have Seth from New York City and Judy from Memphis, Tennessee. Okay, so it is now prize time. So let me look for my prizes. And there is, let me come out of the webinar. And okay, I can see there's someone has just pointed out, Garrett just pointed out, Microsoft currently has a bigger market cap than Apple. So you could have a three-way race here between NVIDIA, Apple, and Microsoft, who is the biggest company at the end of the day, because Microsoft also having a big day, up $6.